Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. As many people know that watch my shows, I've been very bullish on gold. The breakout that it had in November that took it much higher until the end of January. Then it rolled over as the US dollar gained a bid. I think the real action with the US dollar actually started in September when it came under a lot of pressure. And both of these are like counter trend rallies. With gold, I think you had a counter trend rally to the negative. And now it's resuming that bull market that started in November. And with the US dollar starting down in September till about February, it had a short-term rally in February and a little bit here into March, but I think it's going to go down more. Now, the basic reasons for that argument is that for a long time now, several months, I've been talking about the Federal Reserve over-tightening, and that over-tightening putting pressure on the housing sales, car sales, big-ticket item sales. The consumers are stretched. They're using their credit cards to make ends meet and paying 19-20% interest rates to do that. And this is really because I think the Federal Reserve, after 14 years of near zero interest rates, then spiking them the way that they did in 2022 and even into 2023, has caused a lot of problems, but they were ignoring those until just in the last week or so. We saw the Silicon Valley Bank had to be closed down by the FDIC. And the main reason was that they were offside. They put a lot of their money into mortgage-backed securities and long-term bonds that went against them with the moves by the Federal Reserve, and this put him into a very tough economic situation. Other small banks, Signature and another one, also went into trouble, and the FDIC had to step in and stop or close Signature Bank. And so then the Federal Reserve on this past weekend came up with a new scheme on how to protect the banks. This time they have a window that the banks can use, and they can use as collateral their underwater long-term bonds as credit at 100% on the dollar. This is just amazing to me, the lengths that the Federal Reserve will go to save their favorite child, the banks. But another thing that happened that I talked about on the weekend was that I would expect to see a lot of customers of small banks moving their money into the big banks, which started on Monday and hasn't stopped since. The big banks are seeing billions and billions of dollars being put into the new customer accounts, and those are going from the small banks. And a lot of those small banks have the same kind of problems as Silicon Valley Bank and others. And this is the ripple effect, and the dominoes are falling, and I don't think it's really going to stop. I mean, yesterday we heard that Credit Suisse is in serious problems and they need a bailout. They got a lot of business in the United States, so I think that this ripple has turned into a tidal wave for them. And today we're hearing about First Republic, where they're in serious problems because of everybody taking money out of their accounts, putting it into the big banks. And now the big banks are talking about how they're going to bail out First Republic. When the whole problem, these are stop stopgap measures to protect the banking sector, but the biggest problem is that the Federal Reserve has been over-tightening. Next Wednesday, they have a meeting, and a couple of weeks ago, it sounded like a half a point was baked into the cake. I don't think that's baked into the cake at all. I think now it's about a coin flip, whether they'll do a quarter of a percent or not. I believe that they will do zero. I think what the Federal Reserve has to do now is they have to stop raising interest rates. They have to start talk about the potential that they will lower interest rates to protect the financial sector and the economy. And I think they've just got to let the economy run. They've got to deal with uncomfortable inflation and let it run, and try to grow their way out of the problem that they created with the 14 years of near zero interest rates, and then 1 year of rapid increases in the interest rates. They certainly are breaking things. Now they're breaking the banking sector, and I don't think that will last for very long. So we'll be staying tuned to see more of this. But in the meantime, I think we've really got a perfect storm for gold and silver. They are one of the last few places where investors can park their money. We're going back to kind of old-fashioned economics, where you go off the gold standard, and eventually when you take the reins away from the banksters and the government, problems are going to happen. And now I think that you're going to have a de facto gold standard and silver standard, where investors that want to protect themselves need to go into hard assets. Even Nouriel Roubini, Dr. Doom, who once called the gold a barbarous relic, I recently listened to him talking, and he thinks the place to be is in short-term bonds, treasury units, and gold. And I think by extension silver. So in keeping with my feeling that we're in a perfect storm for gold, I think it's going a lot higher. I think 2,000 to 2,500 is the next big window that we're going to see it go into. It's right now trading at about 1,918. But with the pressure that I see coming for the US dollar, with the Federal Reserve needing to stop raising interest rates, I think it's just a perfect storm for gold. And fortunately, as you can see, all of my sponsors here, they're well positioned in gold. And so what I did yesterday is I did a show on Athena Gold, which is a company looking for oxide gold, high-grade oxide gold in Nevada. And today I'm going to talk about Dynasty Gold. Now, Dynasty Gold is a new sponsor that started a couple months ago in January. And the reason that I invited them to be a sponsor is because of the drill results that they had. I'm just going to share my screen right now. And these are the numbers that really caught my attention. As you can see here, their 2022 drill highlights that they announced in January. DP 2202, 65 grams of gold over 3 meters. DB 2203, 151 grams of gold over 3 meters, including 246 grams per ton of gold over 1.5 meters. Also, DB 2204, 25 grams of gold over 1.5 meters. Now, what they have here is an orogenic gold system, and they're at a seminal point when you're exploring an orogenic gold system. Well, first of all, I'll tell you what that is. When you get these deep crustal cracks in the earth, they're the conduit or path of least resistance, where the cracks open up and allow the fluids that contain the gold from very deep to make their way up to the surface. And when you have the right kind of faulting and you find high-grade mineralization to bonanza-grade mineralization, that is a seminal moment for the exploration of an orogenic gold system. And as you can see here, they're hitting those kind of grades, bonanza to high grade at 102 meters, 88.5 meters, 120 meters. Now, what's really exciting about these orogenic gold systems is that they can go very, very deep, 2,000-3,000 meters. And as you get deeper into the system, you're getting closer to the heat source that caused that gold mineralization, and that followed the path of least resistance up these faults. And so then what you want to look at is continuity, because you need continuity in order to have an orogenic gold system. All right, so what I got to do is stop share for a second, and then I'm going to go here and I will screen share again. Oops, wrong one. Just give me a second here. That's not what I want to do. I'm going to cancel that. And now I want to share screen. Here we go. Okay. So here's a drilled trace. And I learned a long time ago to follow the gold mineralization in the drills. And as you can see here, you got 3 holes. And this one here is a historical hole. And these are the 3 new ones. Okay, so in the historical hole, the pink is the high grade. You can see high grade there and high grade there and pretty good grades right there. Then you step over about, let's say 50 meters, and look at all this high grade. That's where they got that 1.5 meters of 246 grams. And down here, you've got high grade. So that's a pretty nice intersection of high grade. You step over and you've got more high grade. You step over and you've got more high grade. So there's a continuity here starting to develop that's quite exciting. And I can't wait till they start drilling some more holes down in here. But this is also an interesting situation, because in here, you've also got 3 meters of bonanza-grade gold. So these zones in these orogenic gold systems, they're not big, thick zones. They're small, tight zones, but they've got super high grade and low cost to produce it. And these make for very high margin mines. So you've got good continuity here. And then you've got another thing of bonanza grades showing up down here. So future drilling is going to have to keep following this stuff and trying to determine where this is. But you've got 2 parallel zones there of high grade to bonanza grade. Okay, so now I want to bring up my Google Earth. And this is one of my favorite exploration tools, as many of my viewers know. And so here is the Google Earth image. Here is the town of Dryden. Here is a road that goes to Dryden. And as you can see, in very close proximity to that is where Dynasty Gold's Thundercloud project is. Now, remember earlier I talked about these deep cracks in the earth that are important for the high-grade gold to make their way up. And as you can see here, this is one of those big faults. And here you've got another one. And then right in between is where you've got the high-grade mineralization. And often what you're going to find is contacts of certain rocks or greenstone rocks that are in this area, and right at the contact is where you've got the high grade to Bonanza grade hits. So they check off all the boxes for an orogenic gold system, but they're at a very seminal moment, and yet the market isn't giving them much love for that. Now, that's kind of indicative of the valuations that we're seeing with a lot of gold stocks right now. They had gone through a very difficult time in 2022 as gold was getting down, as the US dollar was going up because of all the interest rate increases. And so this got valuations very, very low, record lows. Reminds me of the year 2000, when that was just before the 2001 to 2012 great bull market for gold started. It started at really low valuations for the price of gold stocks. And I think we're there again. Now, in November, when gold started to go up, a lot of gold stocks started to go up as well, outperforming the price of gold. But then often what happens is, as gold went into a short-term pullback inside of a bull market, which happens often, the gold stocks got beat down, and now they're back to those valuations similar to November, October, which I think is the end of the gold bear market of 2022, and the start of the new bull market is in November. And so, but this creates some phenomenal opportunities for investors. I'm seeing it across the board that gold stocks, big and small, are very undervalued right now. And that's why I'm cranking out a lot of reports right now, because I think that this is a spectacular opportunity for investors in gold stocks. So that's the Dynasty Gold story. They're in a good jurisdiction. They're in close to infrastructure. They've got an orogenic gold system, and they're ticking off all the boxes. They've got the faulting that's needed. They've got the mineralization. And in that high grade to Bonanza grade, they're getting continuity, and it's wide open to keep following it deeper. And as they do that, I think they're going to have an important discovery on their hands. And I think you should take a look at Dynasty Gold. On that note, as always, my shows are for information purposes only. It's important for you to speak with your financial advisors to assess whether any of the companies I talk about are suitable for your risk profile, and do your homework. What I'm showing in these shows that I've been doing recently on my individual sponsors is that how I go about doing my homework. And I've got some, after I finish the series of doing all my sponsors with these individual shows of why I like them and what I look at as important, I've got a lot of great picks that I cover about 30 companies actively right now in my reports. 12 of them are sponsors, and the rest are non-sponsors that are only picks. So I'm going to start out by doing these deeper dives into the individual sponsor picks, and then I'll go into the individual picks as well. On that note, have a great day. We'll talk to you soon.